because this isn't a training video. This is a what the heck is going on and what to do about it video. Hey, what's going on, clever investors? Cody Sperber here. Today's training video is going to be a little different than some of my other ones because the Fed just raised the Fed funds rate by over 75 basis points. The economy is rapidly deteriorating. Things are changing, and this is kind of a State of the Union conversation. So if you're into real estate investing, if you want to make sure that you can get out in front of the curve and the shift in the coming real estate market, pay attention to this video, watch it all the way to the end, because this isn't a training video. This is a what the heck is going on and what to do about it video. So I'm glad you're here. Subscribe to my channel, and let's just get right into this. So let's think about what's happened over the last 2 years or so. First off, our national debt, has it gone up? It's over $30 trillion. When COVID hit, the government came out and printed $5 trillion and handed it out to people, paying them not to work. Those people, so whenever you do that, if you give money away, what ends up happening is they spend that money, right? Money always rises to the top. If you ask any rich person that owns businesses, you can go give $1 million to a normal person, like a working class normal person. Okay, I don't want to say poor person, but I mean, it is what it is. You give money to somebody, they're going to go spend it, right? Because they've never had money, so they're all excited. They can go get all the things that they wanted to be able to get, and so they spend the money. Well, those money goes to goods and services, which trickles up to billionaires and big corporations, right? It's just the way the thing works. And so what happens is we printed out $5 trillion. We incentivize people not to work, which means they're not producing. The only thing we produced was dollars, right? And so those dollars trickled up to rich people who went out and invested it and bought all this real estate and all these stocks and all this crypto and all the other crazy stuff that they bought. They invested it, or poor people just spent it, right, on goods and services. And so what's happening is that caused commodities to skyrocket, right? Or the real estate market went through the roof. And there was such little inventory and such pent-up demand from COVID that if you look at what was going on, like we were having 20+% price increases in the real estate space year over year for multiple years in a row. And it priced people out of the market. And so what we're witnessing right now is the death of the middle class. And the federal government is frantically trying to get inflation under control, which is over 8.5, 8.6%, which is BS, by the way. That's not the accurate number, right? Why would they tell you the truth, right? Like, think about any company, any business, the government. They have a marketing department. That marketing department has to spin the truth and get it out to you so that way you buy what they're selling. And so we can feel it. Gas, food, rental prices, everything has gone up. And so they're frantically raising the Fed funds rate. And we'll get to that here in a second. But when they raise the Fed funds rate, that's supposed to slow down the economy because it raises all the cost of all the borrowing done in the country. And so they're scared to death because they cannot control this inflation. They had decades of quantitative easing. If you don't know that word, go Google quantitative easing and you'll see it's just printing of money. And so right now they're actually trying to contract the economy aggressively. And that causes some challenges for us real estate investors. And so what's happening is people are getting priced out of their homes. And right now there are corporations that have trillions of dollars that are moving into the market. They're trying to buy 1/3 of all the single family real estate in the country. They bought the industrial, they bought the commercial, and now they're last probably 5 or 7 years, they've been working on the single family market. And you've seen them, Open Door, OfferPad, all these hedge funds, they come into the market and they overpay for properties. You saw Zillow crash and burn spectacularly because they tried to do their iBuyer program and it didn't work because they were overpaying for properties. The math doesn't work. And what we're seeing right now is the whole thing is grinding, right? And we're about to get ran over. And, I'm pretty lucky. I own a lot of assets, a lot of businesses. I have a lot of cash flow. I'm probably going to survive this thing. Will you? I don't know, but I want to help you prepare to make sure that you stop spending right now. You limit your liabilities. You pay down your credit cards. You cancel those vacations and you go get a second job. There's only 3 ways we're getting out of this mess. You're gonna sell your way out of it because you have good sales skills, and a good salesperson can always create income, right? So you're gonna sell your way out of it, you're gonna entrepreneur your way out of it, you're gonna start some businesses and leverage other people's time, money, energy, or you're gonna invest your way out of this, okay? So that's really it. So look at, when I say the death of the middle class, this is what I mean. The average American makes $68,000 a year. That's it, 68K, and those dollars are becoming less and less valuable. That's what inflation is. It's an unseen tax causing your dollars to be worth less, so it costs you a lot more to do things. Well, that really, 68K a year is $52.30 a month. That's $39.23 on average after taxes, okay? After taxes is $39.23. So if the average house right now, and go look it up, the average house in the United States is $391,000. So if you're making, after taxes, $39.23, and it's costing you $391,000 to buy a house, at a 5% interest rate, that house is going to cost you $2,321 a month. All right? So that's 59% of your after-tax take-home income. So think about all the millennials. Think about all these people that were trading Bitcoin and all this stuff and stocks, and all of a sudden the stock market crashes and the Bitcoin market goes down 60%. They stopped doing that, right? Because they panic and they sold, or they lost money and they pull out. And now they're all going to be going to look for a job, right? And there's a massive amount of millennials that are going to be looking for a job. We're going to see our unemployment rate go up. There's also a lot of millennials that are at home buying age now. So there's like all these things crisscrossing. And it's unaffordable to spend almost 60% of your take-home income on one thing, especially when gas and food and everything else is really high. So that's a hot mess. They're now becoming renters. They're probably spending maybe 40% instead of 59% on their rental versus ownership, right? So they're just getting priced out. And at the same time, all these corporations are buying up all the real estate, making less inventory. There's supply chain issues, yada, yada, yada. You guys get where this thing's going. Now, why is all this happening? Why are interest rates, mortgage interest rates going up? So I showed you at a 5% interest rate. I just looked it up right before we started shooting this video. It's almost at 6% right now for a 30-year fixed interest rate. So that means it's really probably like 70% at this point. Why are interest rates going up? Why is the Fed doing what they're doing, and how is this going to affect you? So just a little understanding of how the Fed works. So the Fed is chaired by somebody named Jerome Powell, right? He's a banker, and he's in charge of the Fed. But there are a bunch of people that work at the Fed, and they meet multiple times throughout the year. They just had a meeting the other day, which is why they raised the Fed funds rate. And there's really three things that the Fed can do every single time that they meet, right? And they're either going to expand the money supply or contract the money supply, right? So that's kind of how it works. So right now, for the last decade, they've been expanding the money supply by printing all this money. Now they're trying to contract it. And they do it through three different levers that they can pull. The Fed funds rate, or the discount rate. This is the interlending rate at which banks can lend to each other on a nightly basis to clear their books. We don't got to get too much into that, but the Fed funds rate, if you understand what lever that is, that causes credit cards to go up. That causes HELOCs to go up. That causes a lot of personal loans and lines of credit to go up. It also causes mortgages to go up, but not as heavy as the next one. The next one is called open market operations. Now, if they raise the Fed funds rate, means that it costs more for banks to borrow between each other. The last time they raised that rate as aggressively as they're doing it right now this year was 1994. In 1994, the cost of everything shot up, right? Inflation was getting out of control and the cost of everything shot up. And they raised the Fed funds rate 300 basis points in 1994. Well, they just raised it 50, then they raised it 50, then they just raised it 75. So that just is an indication how scared the Fed is, because it's just inflation's getting out of control. And they're going to meet like 3 or 4 more times this year. It's going to be almost 4%. It'll be over 3%, the Fed funds rate, by the end of this year. So whatever we're feeling right now, multiply it by, or like double it, and that's really where we're going. Open market operations is the buying and selling of bonds, okay, treasury bonds. And I don't want to get too into this, but if you understand how bonds work, bonds, the price of a bond and the yield, the returns, are inverse. So just think of a housing auction, right? If I have a house and there's a bunch of people bidding on that house, the price gets bid up, which means the returns go down. Well, if the government puts out bonds and they're trying to contract the economy, and they put out a 10-year treasury bond, and the stock market's on fire and investors are making all this money over here, that means there's not a lot of people bidding on this bond, which means they could buy it at a discount, which means their yield is really high. So what's happening is the stock market tanked, and it was hard to get, for a while, it was hard for the Fed to contract the economy. This is why it was taking so long. They couldn't get people out of the stock market and the crypto market and over into the bond market because they were making better returns over here. Well, now they're starting to flood into the bond market. And so what they're doing is working, it's just not working fast enough. They printed too much money. And so now people are starting to move over to these 10-year treasury bonds, and as the 10-year treasury yield goes up, so does your mortgage rate. So this is why we see the Fed funds rate and the 10-year treasury. You got to pay attention to these things because that's the cost of borrowing. And I believe that if they cannot get things under control, a 7, 8, 9, 10% mortgage is not out of the question. So pay attention to what's happening over the next 2 or 3 Fed meetings. You can Google when does the Fed meet. You'll see when they meet. And normally what happens is the week following after they meet, panic in the streets. And that's what we're feeling right now. The other thing is the reserve requirements. This is just how much money the banks have to keep on hand. This is affected by these things. We don't need to get into that. But those are the levers that they're pulling. So what does this mean to you as a real estate investor? Okay, I mentioned, first off, personally, you got to button down the hatches. The next 5 years is going to be pretty freaking painful for anybody who's not making an absolute killing with cash flow coming in. If your job isn't just pouring in so much cash. I had to go to my entire company at Clever Investor the other day, every single one of my team members, and give them a 10% raise just so they can keep up with inflation. That's how scared I am for my team members and my people, because they're just getting their ass kicked right now. And I'm lucky because I got all this cash flow and all these businesses. So if you don't have that, you got to live below your means. Pay off your credit card debts. Every time the Fed funds rate goes up, your credit card bills are going to go up. Everything you want to borrow is going to go up, which means people's spending habits are going to change. This is how we shift into a recession. And my fear is we're going to go to stagflation if they can't get the inflation under control. Stagflation is a depression, high unemployment, and high prices. We don't want that. That is really freaking bad. And that's like where everything is just crashing for a long period of time. We don't want that. Okay, so you got to button down the hatches financially, personally. You got to ramp up your make money energy, which means that whatever good idea you thought you had, but you've been kind of putting it on the back burner, raise that energy up and go and do it now. Get that business started. Start that side hustle. Start investing. Start wholesaling, right? Think about some of the things that are going to be really valuable in the future. If you were looking for a good side hustle right now, and you're like, Cody, what do I do? Get into wholesaling. Do some deals with me if you want to. I have a program called Do Deals With Me. I'll put a link down in the description down below. But find deals, bring them to me. I'll buy them, and we'll split the profits when I flip them or when I buy them off of you, right? So there's ways for you to flip houses. Think about what's going to be really valuable in the future. 3%, 4%, and 5% mortgages. If mortgage rates get to 8, 9, 10%, do you think a 5% mortgage, which we've been kind of babies, we've been conditioned to think a 5% mortgage is expensive. 5% mortgage is a great mortgage. If you could get a 5, 6% mortgage under contract right now, or in the future when mortgage rates are really high, that's going to be a good mortgage. 100,000, 200,000, 500,000, millions of people refinanced into 2, 3, 4% mortgages. Those are going to be gold. So creative finance, study that, master that, start implementing that. Novations, start implementing those, master those, learn those, and implement those. Doing deals with guys like me and gaining that new skill of being a deal finder. When you do deals with me, just so you know, I give you the free training and I give you the free software so you can find the deals. And then I give you a secret deal portal where you just submit deals to my team. And then my real estate team is the real estate investors. We go out there and put in all the hard work. You just are the deal finder, and when we wholesale the deal to a rehabber or a landlord, we split the profits 50-50. So like easy side hustles are out there, but now's the time to get off the sidelines, ramp up your energy 10, 20, 30x right now. For me, I started 75 hard because I want to be in the best shape of my life, because I want unlimited energy to attack this thing head on. Those businesses I was thinking about starting, I started them. We're getting aggressive right now on the house buying side of things. If you understand inflation, if inflation erodes good, cheap debt over time. So why do you think all these hedge funds have been buying real estate by the trillions? They're doing it because they understand how money works, and most people don't. You don't understand that if I borrow because I'm a big hedge fund, I'm able to borrow money at 2%. And I go buy a house, and the inflation, and I leverage my 2% money for my investors with a 3% mortgage, right? So now I have the power of leverage. I could buy a lot more real estate. I buy this 3%, I buy a $400,000 house at 3%. Over a long period of time, if inflation's at 8%, my 3% goes negative over 10, 12, 15 years. And those hedge funds are in negative interest rate territory. They're getting paid to buy real estate. They're getting paid to screw you out of your future opportunities, which is why it's so important for you to get educated and take control back. How do they control your vote? How do they control your future? They control where you live. They control what you eat. You'll vote and do whatever the big corporations want you to do. Right? It's going to be like Hunger Games in the future if we don't take back control. All right? So this is my warning message, kind of a state of the union. I just threw up the camera. I'm just spitballing, but I hope you got something from this video. If you did, smash the like button, drop me a comment down below, and just take frickin' action. That's all I can ask for you. Take some action, and don't be a statistic. Be one of those people that rises above and actually gets out there and takes advantage of this opportunity, because it really is an opportunity. A lot of people are going to look at it like they're getting ran over. I hope you look at it like an opportunity. All right, that's all I have for you right now. Cody Sperber, the Clever Investor, signing off. Till next time, take care, comb your hair. We out.